Hi there traders, this is FX Explained and this is Steve Miley, and today we're going to kick off the first of a regular set of features in here, FX Explained in the Forex zone. It's going to be a short-term look at the major FX pairs in here. So we're looking at Euro dollar, cable, dollar yen, Aussie dollar, Kiwi dollar and US dollar, Canadian dollar. So we're going to be taking a look at those 6 major FX currency pairs on a regular basis in here, and we're going to start looking at the very short-term moves, just what's going to hopefully be looking for the next 12 to 24 to 48 hour moves on these currencies. So starting off with the euro versus the dollar, we've seen a setback in here, back down below this trend line that we saw reverse with this super strong rally we saw in June, driven higher by mostly dollar weakness initially, and then the ECB, a slightly less dovish tone from the ECB, driving euro dollar higher critically through this 113.24 level. We have seen a setback in here more recently, but whilst holding above 112.50.43, we think that's a good buy zone down there, and anywhere from where we are trading now down to 112.50.43, we're looking to buy for a rebound back higher. Slightly different tone when we look at cable though. The cable's been really unable to build on this June rebound, so early June rebound that reversed this down trend line, unable to build on that. We did poke above 127.51. We've got a key resistance here at 128.14. The market setting back from there, and cable certainly looking more negative and looking for a challenge down to this 126.52, 126.40 level as we go into the end of this week, going into Friday. Let's take a look at dollar yen now, consolidating throughout June. Very, very little price action. We've been in basically a 100-point range. The market hardly moving in here. More recently though, rolling back from this 108.80, 108.93 resistance area, and then respecting this downtrend line still. Bearish pressures very much intact. Short-term risks down to 108.13, 107.79. Antipodean currencies now, Aussie and Kiwi. Aussie looking very poor in here over the last week, certainly from the middle of this week, a more accelerated breakdown, down through the little up counter trend line in here from May, down through more recently 69.23 support, and now probing down below 68.99.97. Real downside risk now to challenge or re-challenge the lows down here at 68.63.62. Down through there would then re-energize and restart an intermediate term bearish theme. Let's take a look at the Kiwi. Not quite as negative, but nevertheless we're in more of a range environment in here now for Kiwi, 66.81 to 64.95.93 on a bigger picture outlook. A plunge lower in here overnight, threatening 65.23. The market just holding there in this little kind of basing trend line we have, but then real risk for a push down through here through 65.23 to challenge this key 64.95.93 area. And then finally we're going to look at dollar CAD. So dollar CAD in here certainly having a rebound more recently. We've seen a little bit of US dollar, broader US dollar strength coming through over the last couple of days, but nevertheless this plunge lower from early June in here, down through critical supports here at 133.51 and 132.70, also through these trend lines that come up from earlier this year. All of that signaling a more negative dollar CAD mode, and we look at this to be a counter trend move that we've seen over the last few days. So we're looking for 133.66 to cap out and looking for bearish pressures to resume from below that level. So this has been Steve Miley for FX Explained, and we've been in the Forex zone.